I want to bring in Eddie Ghabour because Eddie Ghabour called this sell-off last Wednesday when he was on this show. Eddie, congratulations to you. You got it right. But my question is this now the start of something really big? Tell us where we're going here.
So, look, I think short term we could potentially be oversold here, and we may get a little bounce. But I don't trust any rally right now. I think investors need to look at the signals that we've been talking about since November. This market, in our opinion, is going to be trading like a bear market for the next 6 to 8 months. So you're going to, in bear markets, you'll get bounces. In our opinion, for those that did not de-risk, they need to look at those rips as opportunities to reduce risk. Like yesterday, the market was up 400 at the open. We trimmed a little bit more. We are preparing for a lot more downside than where we are here, Stuart.
Okay.
And I know people still have a hard time wrapping their head around this because they look at how solid certain companies they own are. But as you know, when you're in a sell-off, it doesn't matter if you're a good company or bad company. If you're in the wrong sector, you're going to get hammered. So the Fed is the biggest question mark here.
Okay, now here's the big question which a lot of people are asking. If this is a bear market, is that the kind of market where we go down and stay down for a number of years? What's the chances of that, Eddie?
I do not think that's going to be what happens. I think we see a steep sell-off this year that lasts another 6 to 8 months. And I believe at that point in time, the Fed will change course and start to potentially loosen policy again. And that will be a great opportunity to buy these assets. But I believe, in my opinion, we still have at least another 8 to 10% on the broader market to go down over the next 6 months to 8 months, because the second quarter, if the Fed does what they tell us they're going to do, the second quarter is going to be extremely problematic because the economy will be slowing down quite a bit. Earnings growth is compressing, and the yield curve is starting to flatten right now. The 10 years come down, and even today the market's trying to come back. But the top performers, as I'm looking at holdings we have for our clients, utilities are doing great today. Consumer staples are doing great today. The real estate tied to rent is doing great today. The safer, lower beta plays are outperforming the cyclical stocks and the high-risk stocks on an up market. So it's happening, and you need to be active and trade. If you need to own the opposite of what you owned last year if you want to succeed throughout the next 6 to 8 months. In our opinion.
That's pretty radical stuff, Eddie Ghabour, but we appreciate you jumping on the show like that. We do appreciate it. We'll see you again real soon.